Euro dollar. So the euro remains confined to a well-defined downtrend, with the market recently breaking down below key support at 110.87. At this point, the latest bounce is classified as corrective, and any additional rally should be very well capped ahead of 113 in favor of the next downside extension back towards the July base at 108.09. Only back above 113 would take the pressure off the downside. Sterling dollar. So cable continues to be very well capped on rallies just over 155 and towards 155, and the market is looking to carve out a lower top ahead of the next downside extension back below recent lows at 150.107. At this point, only a close back above 155.10 would delay, while a break back above 156.59 would be required to take the pressure off the downside. Dollar yen. So while dollar yen holds below 121.74, that recovery peak that we saw back in August, the market remains confined to a bearish consolidation, with deeper setbacks favored over the coming sessions back down towards the recent range lows in the 118 area, below which exposes the August base at 116.12. Only back above 121.74 would compromise this bearish outlook. Euro Swiss. So Euro Swiss remains confined to a consolidation over the past several weeks, although the market is favored to trade higher back towards and eventually above recent peak at 110.50 and towards 112 further up. At this point, only back below 107.14 would compromise this outlook. Aussie dollar. So Aussie has been relatively confined to some consolidation over the past several sessions, although the market remains confined to an overall broader downtrend. As such, any rally should continue to be very well capped towards the 74 area, with only a break back above 74.40 to compromise the bearish outlook. Dollar CAD. So dollar CAD remains locked within a well-defined uptrend, with the market recently finding support by some solid previous resistance. And at this point, any setback should continue to be very well supported above 128 in favor of the next major upside extension beyond those recent 11-year highs at 134.57. Only a close below 128 would compromise the bullish outlook. Kiwi dollar. So Kiwi has been well capped on rallies ahead of 70, and the market remains confined to a broader downtrend, with a lower top now sought out below 70 ahead of the next major downside extension and bearish continuation below those recent multi-year lows in the 62 area. SPX 500. So the S&P 500 has been very well bid over the past several weeks, basically since August, with the market recovering now back above 2100 and within a stone's throw away from the record high from May at 2137. At this point, we need to see a break back below recent lows in the 2058 area to take the immediate pressure off the top side. Gold. So gold has seen some setbacks over the past several days, although the market is still confined to a recovery outlook off that multi-year low around 1073. At this point, look for a higher low to come in somewhere in the 1130 area by this rising trendline support off the 1073 low in favor of the next upside extension back above recent highs, going back to the 15th of October around 1192 and towards 1233 further up. Really, only a close though below 1100 would compromise the constructive outlook for gold.